Sandile, many thanks for making time to speak to us.
Thanks, Arnold.
Let's start this off with the interesting developments in the Free State. It has been a very bumpy year for, well, outside Gauteng, to be honest. Just give me a sense of how much this actually did affect your full-year results.
Thanks, Arnold and Rapilo. How are you guys?
Good.
Look, we have a pretty significant investment in the Free State, and we bought a portfolio a couple of years ago. That portfolio has not performed as well as we would have liked, and that has definitely had an impact. In fact, what we've seen is that we've actually had 1 or 2 vacancies as a result of that particular portfolio. But on the whole, I think the strength of the fund is that we are a diversified, sovereign, underpinned fund. So, you know, you look at during the period, basically we renewed, 93,000 square meters of GLA. We signed 53,000 square meters of new leases. So it helps because, generally it's very unlikely that all of our regions will perform at the same level consistently. We have been listed for 5.5 years, so it helps to be multi-tenanted with various stakeholders.
You talk about the performance, and you do mention that the rental income decreased by 3.1%, primarily due to disposals. Talk to us a little bit about those disposals, where and what.
Thanks, Rapilo. Yeah, what we did was we announced early last year that we wanted to focus on sovereign. So the disposals list that we came up with was non-core to us. Mm-hmm. So there were generally buildings that were non-government or non-sovereign tenanted buildings. So as such, we basically managed to sell some 7 buildings. We announced the total program was about 1.4 billion. We are left with about another 700 million rands worth of properties that we still have to sell. And if you look at the composition of those properties, they're generally not core to ourselves. Clearly, this is heavily dependent on the positive news that we are hearing from Department of Public Works, who the Minister of Public Works held a public briefing last week, Thursday in Sandton, where he did mention that government was basically looking to implement and renew leases by 31st December 2018, which is definitely very positive for a stock like ours.
Very interestingly, you have not made any acquisitions this year, and you're just looking to maybe reconsolidate what you've actually had in the past 2017, which was maybe a better year. Give me a sense of the previously acquired assets and what you see happening in 2019 if you're not making any more acquisitions. Where's the money coming from?
That's a good question, Arnold. Yeah, we haven't done any acquisitions this year. In fact, we've been focusing on basically inwardly focused. So basically cleaning out house, making sure historically, our loan to value went up to as high as 49% in 2015. That is right down to 41.3%, which is a sterling job by the management team, particularly where you're seeing a pretty tough economic environment. Where is the capital coming from? We've announced late last year a potential PE transaction which could see as much as 4.5 billion rand, which could maybe be recapitalize the company, and that will basically work as an impetus for the growth, for acquisitions, but also what is absolutely critical for a company like Delta at the moment is that we need to spend money on our buildings. CapEx is a major issue. It's a big challenge to try and basically maintain our current tenants, and we need to spend a lot of capital to retain them. Health and safety is obviously a big issue. Greening is a major buzzword around the sector. But in having said that, we do need our biggest tenant obviously to commit to long-term leases. It's difficult as landlords to basically deploy a lot of investments into these buildings when your tenants are on a month-to-month lease. The downstream opportunities that we see is obviously if we can deploy huge investments into these properties is obviously downstream opportunities, employment opportunities for contractors, painters, plumbers, and the likes, which obviously starts to regenerate the CBD economy, which is definitely in dire need of big investments.
Sandile, very briefly, before we came on, me and Rafi were actually asking ourselves this particular question. Ex-Sunninghill, the Eskom portfolio, to what extent is this actually a down risk? And it's not very clear, at least in the press release that was released. What exactly happened here? Yeah,
basically, typically a fund like Delta would not ordinarily have invested in Sunninghill. Our core investment node is in the central business district, where government departments have to be, as they are closer to the transport nodes. So what happened is that obviously with Eskom, basically took a view that they will not be renting from, they've got spare capacity at their megawatt headquarters. They basically started bringing in some government department, I mean some of their departments that had moved out of their megawatt back to megawatt. Obviously this had an impact. Added on top of that, you had PwC move out from Sunninghill to Waterfall, so you've got huge vacancies in Sunninghill. But I do stress that ideally this is not a node that we would have ordinarily invested in, were it not for having Eskom basically partake in there.
Right.
We do have a couple of potential tenants for those buildings, and those buildings are also on the disposal list as well.
Right.